Hi, good morning, everybody. Welcome to our new webinar in the series of our CSRD webinars. I suggest we wait one more minute for the last people to join in, and then we'll get started on our webinar on ESRS E1, understanding the data points. So what we'll do today is first go into a short introduction of CSRD and ESRS 1. Then we'll dive into the specifics of the ESRS E1 and how to report on that specific standard. And then at the end, there's room for questions. Please put your questions in the question menu of Livestorm. Then we can keep track of them and answer them at the end. Otherwise, ask them in the chat and we'll take care of that. All right, so I think we should get started. Welcome, everyone. My name is Jules. I'm Sustainability Solutions Manager at Coolset, and I'm joined today by Jasper Akkermans, one of our sustainability researchers, and he will guide you through all the details of ESRS E1. So what will the agenda for today look like? First, we'll do a really short recap of CSRD and ESRS and what they entail, and which EFRAG documentation you can use to do your own research and what our research as well is based on. And then Jasper will dive into the ESRS E1. And then at the end, we'll have room for questions, and feel free to ask them in the questions menu or in the chat. So CSRD and ESRS, what are they and what are the differences? Before we start, to get a glimpse of where you are currently standing, we have a question about what is your current understanding of CSRD? We'll launch a poll. If you could please answer, that will help us get an idea of where you stand. See that most of you that are joining are in the middle, getting the hang of it. Some of them already have a deep understanding, and a few of you are just getting started. Good to see that most of you are already somewhere farther in the process. I think that's then, especially this webinar, will be really useful. Okay, great to see. Short recap, since most of you understand this already, we'll keep it short. What is the CSRD? CSRD is short for the Corporate Sustainability Reporting Directive, the EU directive that's requiring companies to provide detailed information on their sustainability and social impact. It focuses on environmental, social, governance criteria, the famous ESG. And the goal of it is to increase transparency and comparability of sustainability performance of EU companies. So by providing one framework that every company should follow, it should become easier to compare their actual performance on these ESG topics. So we have CSRD and we have ESRS. So what's the difference between those two acronyms? So CSRD dictates who and when to report. So from starting from next year, most companies with more than 250 employees need to report. That's part of the CSRD regulation. And the ESRS, the Sustainability Reporting Standards, explain what must be reported. We'll dive into that today. The ESRS have over 1,100 data points to which companies must report. 202 of them fall under ESRS E1. And these data points are broken down in different categories, namely strategy, IRO context, so impact, risk, and opportunities, policies, targets, and metrics. There are 10 topics in total, under which 37 subtopics and 72 subtopics. Today we'll focus on ESRS E1, part of the environment pillar. And ESRS E1 will always be material for almost all companies. Part that we can find in the general requirements is that if companies deem it not material, they should explain it with a detailed explanation of why this is not material, and will also provide a forward-looking analysis on whether to see climate change might be material in the future. So now I'll give the word to Jasper, who will guide you through the ESRS E1 data points.
Thanks, Jules. So as Jules gave us an introduction now about CSRD and then the transfer to ESRS, and now we're probably going to zoom into the specific ESRS E1 data points. So before we start talking about what ESRS E1 actually entails and how you report on it, let's first have a look at everyone's understanding of ESRS E1, because I can imagine that here there might be some more nuances in the knowledge that people have. So let me just quickly publish that poll. While you fill in the poll, I can also maybe share a bit of my experience with regards to ESRS E1, because it's such a large and complex topic. As Jules mentioned, it's 202 data points that sometimes it's hard to get an overview of exactly where to stand. So I'm curious to see everyone's view on this. I see a lot of you are just getting started, but a lot of you also know where to look to get started. And I think that's already a really good point to be at, because as many of you might know, it's quite a jungle out there when it comes to the regulatory requirements of the CSRD and the ESRS data points. So knowing where to look is already a big head start. But also for those that don't know, I'll have a slide in this presentation where I explain where to start looking in order to get you started. And of course, I think those attending today, hopefully by the end of the session, you'll be able to say, I know where to look to get started. So before we get into the nitty-gritty, let's have a look at what the objective of the ESRS E1 actually is. So first of all, it assesses the positive and negative impacts and mitigation efforts aligned with the Paris Agreement. So let's break that down one by one. So on the one hand, you're looking at the positive and negative impacts associated with climate change. That means that you're looking at, on the one hand, positive, for example, if you have climate mitigation technologies, such as renewable energy technologies, but you can also have a negative impact, and I think that's where a lot of companies will probably fall under, because CO2 emissions are, for example, a negative impact that falls under ESRS E1, and nearly, if not all, companies do have CO2 emissions. So that's also why, by default, ESRS E1 should almost always be material for companies, because you're likely to always or almost always have an impact on climate change, whether that is positive or negative. The second part here is that the mitigation efforts should be aligned with the Paris Agreement. That brings me to the second point, because what does it exactly mean? It means you need to evaluate your company's adaptability in line with a 1.5 degrees Celsius limit to global warming. And the 1.5 degrees, that's set by the people in Paris back in, I believe, 2015, when the Paris Agreement was signed by almost all signatories attending. And that means that we have a really valuable policy document that companies should, that countries have to abide by, and thus also the companies that work in those countries. So the 1.5 degree limit is basically a limit to global warming. And within the CSRD, it's also kind of a requirement for companies to mention how they expect to change their business model or adapt their business model in order to reach that goal of limiting climate change to 1.5 degrees. The third point is that you want to manage your climate risks and opportunities from impacts and dependencies. I think for the people that already have a bit better understanding of CSRD, you might recognize what I'm saying here with regards to impacts, risks, and opportunities, because that all boils down to the IRO management. So with regards here to climate risks and opportunities, you're looking at how does climate change affect your company financially? And then a financial risk might, for example, be the physical risks of climate change. For example, now a very recent example is the flooding in Valencia. If your company is based in those regions, or you have facilities in those regions, the financial damages because of the climate-induced heaviness of that storm will have significant impact on your industry. So it's examples like these that make, I think, these ESRS data points a lot more tangible, albeit, of course, due to unfortunate reasons. And I think that's also why it's important to consider ESRS E1 as a very important data point, because it's at the core, I think, of the environmental discussions that we're having today. The last one is that you need to assess financial effects of climate risks and opportunities over time, which means that, it's one thing to know which financial risks and opportunities there are. It's another to model those financial effects over time. So don't worry, you don't have to remember all of this right now, because I'll dive into the data points specifically, and then we'll have a look at how to approach this specifically. Let's also discuss why ESRS E1 is so important. So yeah, as already mentioned, it's the biggest ESRS data point, and it's really important, but what makes it so important? So first of all, I think a more holistic argument is that climate change affects and is affected by almost every company, which makes it a very central ESRS topic. Secondly, it's also the biggest and most time-consuming ESRS topic. So as Gio mentioned, ESRS E1 has 202 mandatory data points, of which 66 are conditional. So what does conditional mean in this context? It means that there's, for example, some data points that ask about your relation to coal industries, for example, or different types of fossil fuel industries. Those questions only have to be answered if you are, in fact, working together with the coal industry. If you don't, then many of these data points fall away. On top of that, there's 15 additional data points which are voluntary. So you may report on these if you have the data, but it's not mandatory. And when the time for the audit comes, the auditor will not be looking for these data points in your disclosures. ESRS E1 also includes scope 1, 2, and 3, which requires a lot of time and effort. So we'll also be talking a bit about scope 1, 2, and 3 in this webinar. But for those that are maybe a bit less familiar, scope 1, 2, and 3 is basically the way to calculate your CO2 emissions through the whole value chain of your company, where scope 1 and 2 are your direct emissions, so your gas consumption in the office, for example, and your electricity consumption, whereas scope 3 is really your whole value chain. Mapping this is quite complex, and it's part of ESRS E1. So for that, that might present a challenge for companies that have not yet reported on scope 1, 2, and 3. So now I'm gonna quickly take you through where to look, as I saw that some of you are just getting started and might not exactly know. So hopefully this will be useful to you. So on the one hand, you have the EFRAG topical standards. So the EFRAG is an organization that has released all the official legislation on the CSRD and the ESRS, which are a couple of hundred pages, and they're based in Brussels. They're paid by the European Commission to draft these legislatory pieces. And one of them, of course, is the ESRS E1 standard. So here, in over several pages, they explain what makes ESRS E1 important, what the data points are, and how to report on it. The ESRS topical standards are quite qualitative. So while they do disclose exactly what you need to report, it is written in full sentences and quite qualitative. So if you want to know more about how to actually quantify that, you want to have a look at the Excel list of the ESRS data points. So for those that want to find this list, just Google Excel list of ESRS data points, and you should be able to find it rather quickly. Basically, in this Excel list, they'll have an overview of all of the data points per ESRS topic. And then, of course, in the ESRS E1, you'll have those 202 202 data points split up into the specific sections of the reporting standard. And what we'll be doing today is we'll be having a look at those data points, of course, on all 202, because the webinar is unfortunately not long enough for that, and I don't want to bore everyone with the specifics of all the details. So what I'll be doing is I'll be taking the most important ones per section, and I'll be disclosing them so that you hopefully have a good understanding of how the ESRS E1 is set up, and then how you can also, where you need to look if you want to continue reporting on it with your company. So before we get into the data points themselves, there is a distinction to be made between all of the types of data points in ESRS E1. So I've broken them down here. Let's just quickly go through them before we go into the data points. So the first type of data point you're going to have is the narrative data point. This is the most frequently occurring data point, and it's basically open answers. So here we can, for example, think about questions such as, do you have a policy on climate change mitigation? And then your answer is going to be whatever you fill in. So there's no prescribed set of answers or a limitation to your answer. And then you can start with something like, we think that, or our policy is based on so-and-so. So this is really the most occurring data point within ESRS E1. You also have the percentage data point, where you look at the percentage speaks for itself. And an example here could be carbon credits from EU institutions. So what's the percentage of carbon credits from EU institutions versus carbon credits from non-EU institutions? Then you have the monetary data points, which are usually in euros. And here an example could be net revenue from high-emitting sectors. Semi-narrative, which is broken down into single or multi-select options. As I mentioned, you have these conditional data points. So one of the overarching data points would be we burn coal or we don't burn coal, or we are active in these sectors, and then you can click the sectors you're active in. So that would be semi-narrative. Year, I think also quite obvious, speaks for itself, but basically it's the year of implementation. So you would say if there's a question about your scope 3, you could say we implement scope 3 over 2023. Date also doesn't require much detail, I think, but here you could say for the 1st of January 2024 is a date. Emissions usually disclosed in tons of CO2 equivalent. So when you're looking at scope 1, 2, and 3, you usually disclose that in tons of CO2 equivalent. But of course, if it's a smaller number, you might reduce that to kilograms of CO2 equivalent. And then last but not least, we're looking at energy as a data point. So this is generally a unit of energy. So you might disclose this in kilowatt hours or in cubic meters if you're looking at gas. So I hope this gives you a bit of an understanding of these specific data points. And now let's have a look at the actual data points. So as you also mentioned, the data points are broken down into different sections. So first, we're going to look at the governance section, then we're going to go to strategy, then we'll move to impact, risk, and opportunity management, or IRO management for short, and then we'll finish off by metrics and targets, which are where most of the data points under ESRS E1 fall. So let's have a look at governance. Surprisingly enough, the governance data point doesn't strictly relate to ESRS E1, but rather relates to ESRS 2, which is the overarching ESRS topic that every company needs to report on. But then you also have Gov3, which specifically applies to ESRS E1. So what I'll do in these slides is I've had a look at all of these data points, and I include an explanation in the blue text box. And then below that, I'll have 3 key data points that you should consider. Of course, there's always going to be more, but I've tried to kind of make a selection of the ones that encompass the importance of this data point, so that you know by the end of the webinar, okay, if I'm going through ESRS E1 in the rough lines, this is what I need to consider. And then, of course, if you want to actually start reporting, you need to go into the Excel sheet that you can find online, and you need to find exactly the data points to consider on top of the ones that I'm showing today. So let's have a look at ESRS 2 Gov3. Here, the context is that the undertaking shall disclose whether and how climate-related considerations are factored into the remuneration of members of the administrative, management, and supervisory bodies. First data point here is a narrative data point, which means that which states that the disclosure of whether and how climate-related considerations are factored into remuneration of members of administrative, management, and supervisory bodies. Now, what does that mean? That means that if you have a C-level executive, say your CEO, and you want to make sure that they understand or that they're incentivized to, for example, incorporate net zero goals for 2050 into the business policy of the company, you might give them a financial incentive to do so. So if they have a contract for 4 years, you might map out the reduction targets that you want to have in 4 years. And you might say, if you realize those reduction targets, you'll get an extra percent of stock options, or you'll get a financial remuneration, or your salary will go up by so and so. So this is a way for companies to internalize the incentives associated with decarbonization at the management level. The second data point is a percentage. So you're looking at the percentage of remuneration recognized that is linked to climate-related considerations. So this will usually probably be a smaller number, but if the CEO has a salary of say 100,000 euros a year, then you might say, well, then let's say 5,000 euros of that is related to the remuneration of climate-related considerations. So then you would say 5% of the total salary is linked to this. Narrative, the third data point is a narrative data point, and here you're going to look at the explanation of climate-related considerations that are factored into remuneration of members of administrative, management, and supervisory bodies. So whereas in the first one, you're going to disclose what the actual remuneration policy is, and the third one, you're going to explain how they're factored in. Now let's have a look at the first actual ESRS E1 data point, which is ESRS E1-1. And here the undertaking shall disclose its transition plan for climate change mitigation. So you have 3 key data points here, which I'm going to look at. The first one being a narrative one, which is a disclosure of a transition plan for climate change mitigation. The second one is also narrative and looks at an explanation of how targets are compatible with limiting of global warming to 1.5 degrees Celsius in line with the Paris Agreement. So that's what I also mentioned in the beginning, where I looked at the overview of ESRS E1, that in ESRS E1-1, you're really specifically going into the transition plan and how you're going to change your company from the state it's in today, where it might be in a high emitting sector, or it might have a lot of suppliers that emit a lot, to kind of a plan where before 2050 you'll have a company that operates in line with the Paris Agreement. For companies that are interested in finding more about transition plans, have a look at SBTI, the Science Based Targets Initiative. They basically have a framework for aligning your company's environmental goals with the 1.5 degree climate change limit. So have a look there, or reach out to us after, and we'll be happy to share more information with you. Third data point that I want to talk about is a narrative data point, where you look at a disclosure of decarbonization levers and key actions. So this is really just a kind of an action plan on what you're going to do to drive decarbonization within your company. So all of these fall under ESRS E1. Now we're going back to ESRS 2. So we're departing again from ESRS E1, but this is how the EFRAG has set it up. So this is one of the data points to consider. So it's ESRS 2 SBM 3. Here, the undertaking shall explain for each material climate-related risk. It has identified whether the entity considers the risk to be a climate-related physical risk or climate-related transition risk. So what that could mean, for example, is that a physical risk is, let's again take the example of the flooding in Valencia. That's a physical risk. So you might have a factory there that's completely flooded, which leads to millions in damages, but you can also have a climate-related transition risk. So 3 key data points here are, first of all, a semi-narrative one, which is the type of climate-related risk. So we're going to be looking at what are the risks that we need to consider. The second one is a narrative. So here you're looking at a description of the scope of the resilience analysis, because as part of ESRS 2 SPM 3, you need to be doing a resilience analysis. So you need to see how resilient is my company to the effects of climate change, and what do we need to do to get to a point of resilience. And then the last one is a description of the results of the resilience analysis. So we're going to stay within ESRS 2, but now we're going to look at IRO 1. So here, the undertaking shall describe the process to identify and assess climate-related impacts, risks, and opportunities. Once again, the acronym that's used a lot in this world of IROs. 3 key data points to include here are all narrative. So first of all, you're going to have a description of the process in relation to impacts on climate change. Second of all, you're going to have a description of the process in relation to climate-related physical risks in own operations and along the value chain. And then thirdly, you're going to have an explanation of how climate scenarios are compatible with critical climate-related assumptions made in financial statements. So just to give you a bit of context on this topic here, you're really looking at the IROs and how you come up with them. And for example, what you're going to include is an overview of the process that you've taken. So which stakeholders have you spoken to in order to determine the IROs? Which sources have you gathered? Have you looked at academic literature? Have you looked at news articles? What are the kind of processes that you've taken in order to get to the IRO overview that you have for ESRS E1? So now let's have a look at ESRS E1-2. So here we're actually moving also into the impact, risk, and opportunity management section of ESRS E1. So the undertaking shall describe its policies adopted to manage its material impacts, risks, and opportunities related to climate change mitigation and adaptation. So here it's really about the policies. And why do I only have 2 data points? Because in the actual EFRAG Excel list, there's only 2 data points for ESRS E1-2. So that makes it easier for you to report and for me to explain. So the 2 data points here are a semi-narrative one, which is that sustainability matters addressed by policy for climate change should be disclosed. So what are the policies, and how do they address your climate change mitigation efforts, as well as adaptation efforts, of course. And then the second one is a narrative, where you look at a description of whether and how policies address climate change mitigation and adaptation, energy efficiency, renewable energy, and more. So here you're really looking at, okay, well, what are the policies I have? How do they relate to the IROs that we've identified? And how do they mitigate these in the future with regards to the IROs that you have today? Oh, that's a bit too fast. So we're still in IRO management, and this is ESRS E1-3. So here the undertaking shall disclose its climate change mitigation and adaptation actions and the resources allocated for their implementation. So the keyword here is action. So what actions are you taking as a company? 3 key data points that I want to highlight. The first one being a semi-narrative. So here you're going to look at the adaptation solution type. So you just draw up a list of the solution types that you've implemented. It's key also to note, I assume, to mention that adaptation is different from mitigation in the sense that adaptation is a very practical approach to deal with climate change, or practical rather, actionable. Because, for example, where you might say, well, climate change needs to be stopped, that's related to, for example, reducing your CO2 emissions, reducing other types of emissions such as methane, and that's mitigation. But we're in a world where climate change is happening right now, so you need to adapt. So you need to come up with adaptation solution types. So last time I'm using the example of Valencia, but let's say your one adaptation type would be to elevate the building, or to reinforce the building so that the water doesn't get in. Here in the Netherlands, we have hospitals, for example, that are built at elevated levels so that when it does flood and people in the nearby surroundings get injured or need to go to hospital, that it's certain that the hospital won't be flooded. Also, interesting example, in Rotterdam, a big city in the Netherlands, you have a public park which is below street level. And you won't notice when you're in the park because you gradually go down. But what it serves is that when it does flood, the first thing that will flood is this park, which is a non-essential type of land, whereas the surrounding landscape, such as the buildings and the resident and the stores, will flood only after this park has been flooded. So those are interesting examples also of how urban planning is adapting to climate change. So the second one, the second data point here is greenhouse gas emissions. So here you're looking at already the greenhouse gas emissions associated with the reductions that you're going to make in terms of your reduction targets. And then the third one is a narrative disclosure. So an explanation of the extent to which ability to implement action depends on availability and allocation of resources. So this is a bit of a mouthful and a bit of a complex one. I've taken this also directly from the FREG. So here, basically what they're asking for is, what resources do you have to actually implement these adaptation measures? Now we're moving to metrics and targets. What's good to note here is that in terms of materiality of disclosures, you may decide to omit metrics on a per data point basis. So if you determine that certain metrics are not material because they have no relation to your company's business model or your materiality assessment, you may omit them. Materiality is not the focus of today's webinar, but I thought it'd be good to note. So ESRS E1 looks at in ESRS E1 the undertaking shall disclose the climate-related targets it has set. 3 key data points here are about greenhouse gas emissions and a narrative. So the first one is the absolute value of total greenhouse gas emission reduction. And then the second one is the absolute value of scope 3 greenhouse gas emission reduction. So these are the targets that you should set for probably 2030 and 2050. Once again, if you want to know more about setting these targets, look at the SBTi framework. Then the last one here is a narrative. So the description of how a new baseline value affects the new target, its achievement and presentation of progress over time. So basically just an explanation of how to achieve these targets. Let's have a look at ESRS E1. Here, the undertaking shall provide information on its energy consumption and mix. So 3 key data points are the first one being energy, total energy consumption related to on operations. I think that's quite clear. Energy, the second data point is also energy, where you look at renewable energy production. And then the third one is the energy intensity. So the total energy consumption from activities in high climate impact sectors. So if you want to know more about this specific data point, there's a list of NACE codes, which is a whole nother subject. But basically these NACE codes allow you to identify your company sectors. And then they also tell you which sectors fall under these high climate impact sectors. So if you want to know more about that, just have a look at the Google this or reach out to me and I'll be happy to share the relevant information with you. So then ESRS E1, here the undertaking shall disclose in metric tons of CO2 equivalent its gross scope 1, 2, and 3 emissions. So here 3 key data points are gross scope 3 greenhouse gas emissions, gross market-based scope 2 greenhouse gas emissions, and a narrative disclosure of why scope 3 greenhouse gas emission, why a scope 3 greenhouse gas emission category has been excluded, because there are 15 Scope 3 greenhouse gas categories, and you might not include all of them. For example, Scope 3 category 15 is investments. For companies that don't work with investments, you might not need to report this, but you might want to explain why you have excluded this. So ESRS E1-7 looks at things where the undertaking shall disclose greenhouse gas removals and greenhouse gas mitigation projects financed through carbon credits. Here, 3 key data points are the total greenhouse gas removals and storage, then the percentage, which is the percentage issued from projects in the European Union, and last but not least, the narrative, which is an explanation of the credibility and integrity of carbon credits used. So this is applicable to companies that use carbon credits. If you don't use carbon credits, you don't have to report on this data point. ESRS E1-8, here the undertaking shall disclose whether and how it applies internal carbon pricing mechanisms. Basically, carbon pricing mechanisms or schemes are a way for your company to incentivize the reduction of CO2 emissions. So you could, for example, say for every ton of CO2 we emit, we pay 50 euros to an offsetting scheme elsewhere. And therefore, by pricing CO2 internally, your financial teams are also incentivized to switch to low carbon suppliers and to low carbon operations. So 3 key data points here. First one being a narrative is the type of internal carbon pricing scheme. The second one is monetary, so the carbon price applied for each metric ton of greenhouse gas emission. And the third one is a percentage, so the percentage of gross Scope 3 greenhouse gas emissions covered by internal carbon pricing schemes. Of course, this is only applicable, once again, to companies that do work with internal carbon pricing schemes. Then the last ESRS section that I'm going to discuss, which is ESRS E1-9. The undertaking shall disclose its anticipated financial effects from material, physical, and transition risks and potential climate-related opportunities. So 3 key data points here are, first of all, a monetary one, which is where you look at assets at material physical risk before considering climate change adaptation actions. Then a percentage, which is a voluntary data point, the percentage of net revenue for business activities at material transition risk. And then last but not least, a monetary data point, which looks at the expected cost savings from climate change mitigation actions. So here really quantify your climate-related risks and opportunities, and you model them. But this data point isn't mandatory for companies in the first year or 3, because it falls under the phase-ins. And that brings me to the next section, phase-in requirements for ESRS E1. So depending on the company size, certain data points may be phased in, i.e. not reported on in the first year or in the first 2 years. This is applicable to several ESRS topics. Today, we're only going to be looking at what this means for ESRS E1. So for companies with less than 750 employees, that means that Scope 3 emissions may be omitted in the first reporting year, so that you only start reporting on them in the next reporting year. And for all companies, so regardless of the size, the anticipated financial risks, which is E1-9, may be omitted in the first 3 years of reporting. So that means that you don't have to disclose the kind of the quantification of the risks and opportunities in the coming years. Then I'm going to finish it off with a look at the challenges and approaches to working with ESRS E1. So Scope 1 to 3 has to be done in accordance with the Greenhouse Gas Protocol, which is a framework to calculate CO2 emissions, and it's quite complex. So some approaches here are that software can greatly reduce implementation efforts, and that you need to ensure that your methodology is certified. The second thing that I'm going to look at here is complexity and linking climate to financial metrics. I've heard also from customers that they find this troubling. I've heard from the industry that this is quite a tricky thing to do. One approach here, it is short term, but it does give people time to kind of get their head around it, to prepare for it in the next 3 years, is that E1-9, which is the majority of these financial metrics, can be omitted in the first 3 years, reducing the burden of quantification. And then last but not least, the lack of policies for dealing with material IROs might form a problem for companies reporting on these IROs, and especially the section on policies. But also good to note is that policies can be drafted up in response to the identification of IROs. And you might also say that in the first reporting year, you don't have policies, but you have a rough outline, or you're working on it and will report on these policies in the next year. That was it for me. Now I'll give it over to Gilles, and then of course we'll have a Q&A at the end.
Yes, thanks, Jasper. So yeah, Jasper talked about all the challenges and all the data points that are required for ESRS E1. Here at CoolSet, we've developed an integrated sustainability platform where companies can manage all their sustainability needs in one place. One part of that is compliance management, so where we cover end-to-end CSRD compliance, and the other part is carbon management, where we measure, analyze, and report on scope 1, 2, and 3 emissions from companies, which, as Jasper just told, is also an important part of ESRS E1. So what do we do to streamline this process? We've built a compliance module where we've pulled apart the reporting requirements and translated them into humanly understandable question and answer format, where we're going through these different modules, starting with the double materiality assessment, then continuing to the tailored ESRS standards and reporting on all the different disclosure requirements that are relevant for your company, and eventually exporting your report from the platform. So as I said, we have an integrated audit-ready double materiality assessment in the platform based on the guidance by the EFRAG, where you identify and score your impacts, risks, and opportunities based on the internal research and stakeholder engagement that you've done. We help to measure, analyze, and report on scope 1, 2, and 3 greenhouse gas emissions according to the Greenhouse Gas Protocol. The methodology is also certified by TÜV Rheinland. So it complies with all the requirements for CSRD as well. Then, based on the outcome of the double materiality assessment, the relevant material ESRS data points are available in the platform for reporting. And by going through all these different modules, we ensure that you cover all disclosure requirements relevant to your company. You can manage the entire process in the platform by assigning people as assignees, reviewers, and auditors. You can attach evidence. You can generate audit trails, so all the changes that are made in the platform are tracked, which is required for auditing the report. And you can attach evidence to every question to ensure that your auditor has everything it needs to sign off on your report. So now it's time for the questions. We've seen that a lot came in. So I think, the first one, for the targets to be compatible, does that mean that's required to be certified to SBTi or equivalent? It is not required, but if your targets are certified by SBTi, that does mean that they are in line with the pathway to 1.5 degrees of warming. So that does mean that it complies with the requirements for CSRD, but it's not a required solution. So as long as you can properly reason why your targets are in line with this 1.5 degrees pathway, it's sufficient. I think then the second question, I'll give this one to you, Jasper.
Yeah, thanks, Joe. So it's a long question, so let me just read it out. Since ESRS is new, I guess the main question I have is, what does a good example of a report look like? How long is it? How lengthy are the responses for each of the requirements? How is data and narrative presented to be compliant with the requirements from end-to-end example for E1 end-to-end for E1, for example? Good question. So what we're doing at CoolSet these days is we're kind of scanning the horizon for good reports to look at. And I think off the top of my head, I can give you some reports to look at, which I think are quite good, with the disclaimer that ESRS E1 is not mandatory yet. So none of them have been audited in line with the ESRS yet. So some good ones that I can recommend are from Ørsted. It's a Scandinavian company. And another one is H+H Global that I've looked at recently. Third one being the one from, I actually did it this morning, which I found quite good, from Albert Heijn, of their parent company. So those are good ESG reports. So I would have a look at those reports. Overall, what you're going to be seeing in these reports is that the requirements for disclosures are have to be in line with the audit requirements. So there are 5 qualitative characteristics of information that you need to include when reporting. If you want to know more about those, just Google 5 qualitative characteristics of information, and then perhaps also put cool set next to it, because we recently published an article on that. So that's kind of the answer that you need to include, or at least the background that you need to include in your answer. So I need, for example, answers need to be complete and neutral and free from error. They need to be concise. They need to be understandable by a broader audience. So there's a lot of things to consider when putting in the answers. Let me have a look at this question here. What are some effective solutions or approaches for efficiently gathering scope 1, 2, and 3 emission data within the ESRS reporting structure? So overall, ESRS doesn't directly link to scope 1, 2, and 3 reporting. The framework for scope 1, 2, and 3 reporting is the greenhouse gas protocol. So this is a protocol that's been around for quite a while now, and basically includes everything you need to know in order to report on this. If you want to know more, you can also have a look at the articles that we've written about this on our Coolset Academy. But of course, you can also reach out to us and have a look at our Coolset platform, where we explain, or where we give a demo of scope 1, 2, and 3 accounting. But basically what it boils down to is that you're going to be using a lot of financial data, which is, which speaks for itself. And then also activity data, where you look at what kind of, for example, how many kilometers do your cars drive? How many kilograms of product do you import? These things all can be quantified and then converted into either scope 1, 2, or 3 emissions. Are there any ways to see whether a disclosure requirement is conditional? Yes, there are. So you can see in the Excel sheets which questions are conditional. And I also saw in the chat that one of you has said that the Excel sheet isn't in its final form. That was Beatrice. Thanks, Beatrice, for that comment. It's indeed, if you want to look at the final form, you can go to Eurolex, and you can find the final version there. I think for a general overview, it's good to look at the Excel version, because it does give you a very good indication of where to look. But Beatrice, thanks for noting that as well. Let me see where we are. So here's a question from Pablo. The greenhouse gas protocol requires to measure and report CO2, CH4, NTO, HFSCs, and some more. What I've seen is that the greenhouse gas protocol cross-sector tools only have CO2, CH4, and NTO. Does the International Energy Agency electricity factors and DEFRA? So does IEA electricity factors and DEFRA. What guidance is there in ESRS 1 regarding the other gases? Good question. So with regards to scope 1, 2, and 3, it's mandatory from a perspective of the greenhouse gas protocol to include all of these gases that are part of, I believe, IPCC report 4 or 5. And basically what we also do in the Coolset platform is we only include emission factors that are CO2 equivalent. So that include all of the mandatory emission factors as broken down in the overview that you've shared here. I hope that answers your question. Question from George, just curious about ESRS E1-6. Why is gross scope 1 emissions not considered a key data point? It is, of course, a key data point, but I limited everything to just 3 data points. So I had to make a pick of, an example of what to choose. And scope 1 is, of course, crucial. It's mandatory. It's important to include. So by all means, do include it as a key data point. Question from Gloria. For companies starting out with ESRS E1 reporting, what resources or tools would you recommend to streamline data collection and ensure compliance? At the risk of selling our own product, I would say Coolset is a really good solution for both ESRS E1 reporting and scope 1, 2, and 3 disclosures, because here we have kind of a 2-in-1 solution which provides end-to-end compliance both for scope 1, 2, and 3, because it's certified by TÜV Rheinland, which is one of the biggest, if not the biggest, certification body in the world. and also our CSRD process, which has been verified by auditors. Question from Albert. A question regarding Scope 3 categories. If within the company, for example, Scope 3, employee commuting, there's no available data and it was deemed too hard to gather now, is there a general country estimation that you can follow? Which one would that be? Good question. So you can use proxy data for certain for certain data points or for certain classifications. With regards to employee commuting, I do think that you need to send out surveys to, for example, measure how your employees commute to work. But of course, you can use proxy data when it comes to, for example, the specific fuel emission factors or the trains that they use, because everyone, there's always going to be averages, and there you can use country average. But I would say for the specific example, you do need to use a specific survey for your employees. Another example is, for example, looking at the emissions coming from your company's offices. There, you can also work with the square meters of your company building, and then use company or country average emissions for a square meter per office building. That could also be an option. Question from Tom. How far back in the value chain does a company have to go for gathering the emission data? Very good question. In general, the answer here is that you go as far as your financial data goes. So if your financial data, if you're buying certain products, you need to include the value chain that's behind that product. And we've also had customers say, well, all we do is we hold a certain product, because we're in the import-export business, and then it goes through. And does that then justify us having a huge Scope 3? It does, because it's part of your value chain. So for example, if you're in the business of importing fridges, for example, then you're going to be disclosing the emission factors for the import of those fridges. And you're also going to be looking at the Scope 3 category of use of sold products, where you need to include also the electricity usage during the lifetime of those fridges. Hope that answers it. Question from Gloria again. How is Coolster planning to help companies manage the detailed requirements of ESRS E1, especially with so many data points? I'm curious how you make such complex reporting user-friendly. So what we do is we try to make it as user-friendly as possible without losing sight of the complexity of the data points. So we've taken all of the mandatory data points from ESRS E1, but also from the minimum disclosure requirements and all of the data points from the regulations. And we've put them in ESRS E1 in a clear and digestible way for you to understand. And then we support those questions with supporting information where we put the legislation next to the question. So you always know the question, how it relates to the legislation. We also have suggested answers. We have document upload. So for example, if you're disclosing your Scope 1, 2, and 3 emissions, you can also upload your Scope 1, 2, and 3 report. So we always will help you along the way. And for example, we also host accelerator sessions where we help customers through the reporting process so that they are proactively onboarded into the whole ESRS disclosure process. Question from Tim. Is greenhouse gas protocol only a protocol that is allowed, or is PICAF also possible for the greenhouse gas emissions measurement? To be completely honest, I'm not 100% sure. I don't think greenhouse gas protocol is the only one that's allowed, because I do know that there are companies that don't report under the greenhouse gas protocol, but under something else. But I do know that in all the discussions that I followed on Scope 1, 2, and 3 within CSRD, the greenhouse gas protocol is always referenced as the framework to use. I see Valeria asked a question which Gio has answered to in the text, but let me just also elaborate it here. Does your platform also include EU taxonomy? We're working on that right now. So we've managed to take apart EU taxonomy in puzzle pieces that we can then plug back into the software, so that hopefully at the beginning of next year, everyone can work on EU taxonomy within the platform, which is of course also a part of CSRD. Question from Catherine. I do see, by the way, we're nearing the end of our time. So for those that have to leave, of course, thanks for attending. We'll share the questions with you, or the recording will be shared with you automatically. And for those that want to stay for me to answer the rest of the questions, just stick around, and I'll try to go through them quickly. Well, scope 1, 2, and 3 emissions need to be verified by a third party every year under the assurance requirements of CSRD. So what we have here at Coolset is we're certified by TÜV Rheinland. And of course, when you're audited for CSRD, your auditor will look at also scope 1, 2, and 3 data points. So what the auditor may do is he or she may question why you've used certain data points, or why you've omitted, for example, the category of investments. So they might question it. And I would generally say, yes, you can assume that these things will be audited. I think I'm looking quickly through the questions. I think there's quite a few questions. I'm not going to go through all of them anymore, unfortunately. But if you do have burning questions, please send us an email. And after the webinar, I'll try to go through the remaining questions and send the people an email privately. I see here a question from... Yes, she has answered that. Yes, I think I'll answer these questions by email. Yeah, if you have more questions, feel free to reach out to us. Our email addresses are here in the slide, shields@coolset.com and jasper@coolset.com. And of course, we also have past webinars on our website. Just go to coolset.com/webinars to watch more than 5 of our most recent webinars on the CSRD, which you can watch completely for free. So for now, thanks everyone for attending. I hope you found it useful. And we hope to see you soon for our next webinar, which will be about the risks of financial opportunities, of the financial risks and opportunities, and how to consider those from a legal perspective. And we'll be hosting that webinar with a lawyer who's also a CSRD expert. So we'll be sending out more news on that on our Coolset LinkedIn platform this week. Thanks, everyone.